Sanjay Chamria, the VC and MD at Magma Fincorp, joins us on the show right now. Sanjay, hi, afternoon. What, according to you, would be the impact on margins, considering banks have already started hiking MCLR? How do you see your own margins going forward in FY19?
So you see in case of Magma, the overall cost of fund is hovering around 9%. And a good part of that comes from the banking system. So to that extent, if there is a movement in the MCLR, it will have an impact on the overall cost of funds that we have. On the other hand, we have raised capital of about 500 crores, which also has a positive impact of about 20 odd basis points on our overall yields. So we feel that we are comfortably positioned in the current year in terms of our overall net interest margins, discounting the fact of the recent MCLR hike by the banks.
The government has stated that NBFCs need to implement the Ind AS from April 1st. Do you still see respite from RBI given that it's been deferred for banks?
Well, actually, there is a lack of clarity from RBI because when they deferred it for the banks by 1 year, they did not issue a new circular for the NBFCs. So as you rightly said, as the position stands today formally and officially, it is applicable from the first quarter of this fiscal year. And while at an industry association level, there have been representations which have gone, but at Magma, we are preparing and embracing ourselves to adopt the Ind AS norms effective 1st of April 2018.
A little bit of color on where you see your overall asset quality, because that has been under pressure. What would you say is the outlook then going forward for your gross net NPAs?
So this is quite ironical that the banking sector has seen a lot of stress on the asset quality going by the increase in the gross NPAs and host of banks coming under the PCA by the RBI for reporting higher NPAs. But on the other hand, the NBFC sector as a whole has reported much better set of numbers so far as the NPAs are concerned. And so there has been a very comfortable and easy migration to the 90 DPD norms for NPA recognition in March 18 compared to 120 DPD which was in March 17. If I talk about Magma specifically, then it has been a turnaround story for Magma, starting with the NPA sale in March 2017. In March 18, we actually reduced absolute NPA by about 500 crores. And as a result of that, even after migrating to 90 DPD norms for NPA, our net NPA as a percentage of the AUM has been lower in March 18 compared to net NPA in March 17, which was though at 120 DPD. So to put it in perspective, our NPA as on March 18 is just about 5.6% at 90 DPD. Which was lower than 6.5% in March 17.
Right. You have a diversified loan book. How do you see the product mix shape up between vehicle finance and other segments?
So we have broad three verticals. One is what we call ABF, asset backed finance, in which we have passenger vehicle, commercial vehicle, construction equipment and tractors. That book comprises about 70%. Then we have roughly about 19% of mortgage and 11% of unsecured SME lending. So going into the future, we expect the percentage of ABF at about 70, mortgage at about 20, and unsecured SME lending at about 10%. However, within ABF per se, we expect the share of the used vehicles going up to almost about 36-37%, and that of tractor moderated down to about 15%, and passenger vehicle, which is currently at about 27-28%, to be around 24-25%. And all this realignment of a product mix is being done with a view to maintain the net interest margin of more than 8%, and also to contain the credit cost at around 1.5% in the overall ROA tree.
All right, thanks very much for joining us and giving us those details. We wish you the very best for the future, and thanks for helping our viewers understand, Mr. Chamria, on how you're looking at managing the business going forward under the new guidelines.